The world is being rebuilt right in front of you. AI, robotics, and new global systems are reshaping wealth and investment opportunities, while the average person still thinks that the cloud is what's in the sky. The old rules for money and wealth are changing, and they're changing fast. And so my goal with this video is to help you stay ahead of that shift, that we are not chasing opportunities like the majority of people. Earlier in 2025, the World Economic Forum said that we are entering the fifth industrial revolution, and this is going to shift our economy bigger and faster than we've ever seen before. History doesn't exactly repeat itself, but it does rhyme. So let's take a look at the last four industrial revolutions to understand what might be coming next, because you'll see a common denominator amongst all of these industrial revolutions of how some people use these shifts to build very large sums of wealth quicker than most others. Industrial Revolution 1 started in the mid-1700s and went until the mid-1800s, and this was the rise of factories and the rise of steamships. And what we saw happen were the people that understood that this shift was happening were able to build wealth because they understood that the world is moving towards steamships and factories, while the people that didn't fell behind. We saw protests from skilled workers and other tradespeople saying that no, our jobs are being taken away, but the economy shifted nonetheless, but it did take about 100 years. Then we had Industrial Revolution number 2. This started in the late 1800s, around 1870, and went until the early 1900s, around 1914 or so. And this was the growth of electricity, the growth of mass production, things like assembly lines. And of course, some people were very against this shift as well. Assembly workers, the unions, they did not want to see the growth of this mass production and assembly lines, but the people that understood this shift were able to capitalize on opportunity, and it created a lot of wealth because of that as well, and that shift did happen. Industrial Revolution number 3 was the digital revolution. This was the rise of the internet, the rise of electronics, and of course, some businesses and people were very against this. A lot of businesses said, don't buy online, buy local, buy in person. And then we saw some big behemoth businesses that didn't adapt die. We saw that happen with Blockbuster. We saw that happen with Sears. We saw that happen with Kmart. But this rise of the internet and electronics also shifted wealth, and it created a lot of investment opportunities for the people that got ahead of the shift. Then we had Industrial Revolution number 4, the rise of smart technologies. Now this is where the dates start to get very convoluted because this is all happening so fast, but this was around the 2010 time until essentially very recently. The growth of things like information technology, the growth of things like cybersecurity, the growth of things like smart information systems out there that are powering many of the apps that you're using today. And again, this created a lot of protests and unrest. Taxi drivers and hotel owners did not like Uber, they did not like Airbnb, but of course, this shift has happened and is continuing to happen. But the people that understood this, again, were able to build a lot of wealth, who were able to understand what is happening. And now we are entering what the World Economic Forum calls Industrial Revolution number 5. Now, there's two things that I want you to notice before I talk about this. Number one is obviously that these shifts happened. You had people that did not like it, but the shifts did happen. And the second thing that I want you to pay attention to is the length of these shifts. Because before, the first Industrial Revolution took about 100 years. Then we're talking about 50 years or so for Industrial Revolution number 2. Then when it came to Industrial Revolution number 3, we're talking about less than 40 years. Industrial Revolution number 4, we're talking about 10-ish years. Now we're already on Industrial Revolution number 5. So it's coming faster, and with each of these, we also saw a huge shift in wealth. Why does this matter? Because technology is shifting faster and faster and faster, while many humans are not able to evolve and adapt fast enough, which creates opportunities even bigger if you understand what's going on. So let's talk about Industrial Revolution number 5. This is about the convergence, the coming together of humans and technology. Read this. Again, from the World Economic Forum. We can look forward to a future where smart machines and cognitive intelligence perform tasks that match human ability while delivering machine-level efficiency. I hate to say this, but outside of my business and the financial side of what I do, I'm not a very tech-savvy person, but I had to learn how to become very tech-savvy in my business and with my investments, because this is creating a whole new wave of opportunity, and things are getting faster and faster, and either you're going to be ahead of the curve or you're going to be like the majority of people and fall behind. And this is where I want you to be able to find the opportunity, because it is happening right now. So I'm trying to get people to understand what's happening because I'm seeing it happen with our own business as well. So let's talk about what this means. And I do want to remind you that for those of you that are investors or want to become investors, I have put together a brand new free investing masterclass where I walk you through how you can get started as an investor and find hidden hidden investment opportunities before everybody else. I'll show you the exact framework that my firm and I use to research investment opportunities so we can find opportunities before they hit the headlines. It's a completely free masterclass. There's a ton of value in there. And when you register for the masterclass, you're also going to get access to Market Briefs, which is my newsletter for investors, for free, complimentary at no cost. So if you want to get the investing masterclass and Market Briefs all for free, all you have to do is click the link down in the description below to register. In the beginning of this video, I said that history doesn't exactly repeat itself, but it does rhyme. And what we've seen happen in every single one of these revolutions is that people don't want to see that shift happen because that change can be uncomfortable. And we're seeing it happen now. Remember in 2024 when we had all those port strikes that were happening? Well, the reason why those port strikes were happening is workers wanted higher pay, more benefits, and protection against robots. Well, the reality is that the manufacturing industry is seeing its biggest shift that we have seen since the second industrial revolution when assembly lines were created. And if you don't believe me, read this. 72% of global manufacturers are accelerating their digital transformation efforts. What's coming? Something called lights out manufacturing, otherwise known as dark factories. Let me just read you what that means. A dark factory or a lights out manufacturing plant is one that is automated and requires little or no human intervention. It relies entirely or almost entirely on advanced technologies like robotics, artificial intelligence, and the Internet of Things systems. The reason why I'm telling you this is to hammer the point home that sometimes these shifts can feel uncomfortable, but they become inevitable, and either you get ahead of the shift or you don't. And I've told the story a few times now, but I saw the same thing happening in our company. I run a company called Briefs Media. We're a financial media company. We focus on investor research and creating financial news. Well, what I realized is that with all these shifts happening with AI and technology, we're probably going to be bankrupt in 2035. Then I did some more digging, and turns out, yeah, we don't have that much time. We'd probably be bankrupt by 2030. So we made a shift. And so now we're making some of the biggest investments that we've ever made into technology and AI to help create better investing tools for investors that are powered with AI, powered with technology that we're going to be launching in 2026. And we're rebranding our company as Briefs Finance because of that. And then I had another conversation. A good friend of mine works in operations at a fairly large company. And what he was telling me is his company had 300 BDRs. What a BDR is they set appointments for their salespeople. So his company sells software, and he had these sales reps that were essentially setting appointments for their actual salespeople because the salespeople's job is to actually try to sell the software. Well, those 300 BDRs are no longer there. They now have 0. Why? Because they've been able to train AI tools to do the lead generation and the prospecting automatically. And the interesting thing about the AI tools is they don't get tired. They don't take sick days. They don't need those breaks. And this shift is happening in front of us. And I don't say this to scare you. I say this to show you that this also creates opportunity because there's always two sides to every coin. And most people look at the side of fear and panic and scared, but it also creates opportunity. And most people still don't understand that the shift is happening, but if you can start to see the opportunity, you start to see, oh, this can also create new jobs, it creates new investment opportunities, and if you can get ahead of that, it creates the ability to accelerate your wealth even faster by being ahead of the curve instead of being behind it. Now, this is where a lot of people get concerned about this technology shift being a bubble, that AI is a bubble, and I agree, there is a very high chance. I think that we're building an AI bubble, and a lot of the smart people in the industry think so too. Sam Altman, who is the founder of ChatGPT, has said that it looks like we're building an AI bubble. Mark Zuckerberg, the founder of Meta, a huge investor in AI, also says it smells like we're building an AI bubble. But even if we are building an AI bubble, that doesn't mean that AI is going to go away. We had a huge dot-com bubble that was building in the late 1990s that ultimately burst in the year 2000. That meant that some dot-com companies went bankrupt. That meant that internet companies lost a lot of value during that crash. But it didn't mean that the internet went away. It created a shift in investment opportunities. And that's the way that I want you to think. Yeah, there's a good chance we could be in an AI bubble, but that doesn't mean that AI and these technology shifts are going to go away. I want you to understand what's happening that we can find the opportunities. So where's the actual opportunity that you can use to build or accelerate your wealth even faster? Well, opportunity number one is you create a business that is harnessing this new shift. This is the highest risk for the highest reward. You're starting a business, which is a lot of work, a lot of time, but if you're using these new technologies, it creates an investment opportunity for you to build a lot of wealth. Number two is to create a business that services businesses that don't understand this shift. So you can build a business that helps other companies adopt AI and adopt these new technology shifts because they're not tech savvy, but you are. So it's lesser risk, still higher risk because you're starting a business, but less risk than creating a new business type or a new technology. But it also has the potential to build a lot of wealth. Now, for those of you that don't want to start a business, which is most people, and that's completely fine, this also can create investment opportunities. So let's go over what those mean. And I got to give you that disclaimer. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube because I'm not a financial advisor. So let's break this down. Option number one is you can invest your money into individual company stocks that are taking advantage of this shift. This is more risky than I'm going to go over in number two, but it also creates more upside potential. So now you're going out and finding companies that are utilizing AI, that are utilizing robotics, that are utilizing this technology shifts, and then you have to actually research the company, keep up with the financial statements, keep up with the earnings calls, and make sure that it is a good company that you want to invest in, and do the research on the company. This is one of the things that I go over in the investing masterclass, which I have for you down in the description. But the whole idea here is you want to find a good company, most risk, most return when it comes to investing your money in other companies. Option number two, which is less risk, is to invest into a fund. Instead of investing in an individual company, there are funds that can give you exposure to companies that are investing into this shift right here, which can create more opportunity. Again, because these funds are more niche, it's more risky because, well, this whole technology thing could fail, and it's also more volatile. Like we talked about, there's a potential AI bubble building right now. But it can also create opportunities for the financially savvy. Again, I can't tell you what to invest in, just some examples. ETF number one, BOTZ, bots. This is an ETF that gives you exposure to AI and robotics companies. This is created by Global X ETFs. Example number two is CHAT, chat. This is an ETF created by a company called Roundhill. This is giving you exposure to generative AI and technology companies. So both of these ETFs, again, you can buy these on pretty much any stock brokerage. You are getting exposure not to one company, but to dozens of companies, somewhere between 40 to 55 companies with each of these ETFs that now you just have to buy the fund that's giving you exposure to the industry here that are working on AI and technology. More risk, more volatility for more potential return. But you have to understand more risk is involved with that as well because you have the volatility because of how new and how fast things are shifting here. Option number three would be to invest your money into a broader fund, something like ARKK, ARKK. This is an innovation ETF created by Kathy Wood in her ARK funds that's focused on innovative companies that is really any industry that is working to innovate quickly. By the way, as a disclaimer, I'm personally invested in ARKK. Or if you want to take it one step further, QQQ is an ETF that gives you exposure to the NASDAQ 100. The NASDAQ 100 is a group of the 100 largest companies in the stock market that are not financial, meaning most of these companies are technology companies, and the only way you qualify to be a part of the NASDAQ 100 is if you're part of the 100 largest companies that are not financial. So this is a way to get exposure to the broad technology sector that are innovating, that have already seen some growth and some traction. This one has a little bit less risk, but it's still more volatile than investing your money into the broad markets because anytime you see a stock market crash, generally you see QQQ fall more aggressively than that crash because, well, a lot of these tech companies are more volatile. So what we're talking about is that the economy is shifting fast. This shift is inevitable. You can hate it, you can love it, it really doesn't matter. The reality is this shift is happening. And what I want you to do, my goal, is for you to understand how this can create a better investment opportunity for you. That way you can take better care of yourself, your family, and your community. Because the reality is anytime you see one of these shifts, you see a transfer of wealth, you see a transfer of money. Now you can create a business to take advantage of this shift, you can create an agency to help other businesses take advantage of this shift, or you can invest in companies that are taking advantage of this shift. And when I say invest in companies, you can invest in individual companies, which takes the most work and time and research, but also a lot of upside. Or you can lower some of that risk by investing in funds. Now, just because you're investing in funds doesn't mean that there's no risk. I mean, investing is risky, but it's less risk than investing in one individual company. And so we went over multiple different types of funds that you can consider investing in: bots, chat, ARKK, QQQ. They can give you broader or more narrow exposure to some of these shifts, which can create opportunities. But again, remember, the goal is to remember that you need to be a long-term investor, because anytime you see something like this happen, especially at the speed at which this is happening, you're going to see more volatility, more ups and downs. but you want to understand that if you're a long-term investor, you have to be able to withstand those ups and downs and when you see the next crash happen, because there's a big chance that we're seeing an AI bubble being built, that can also create an opportunity, because it doesn't look like AI is going away. Again, if you want some more resources as an investor, I have my investing masterclass for you down in the description. And if you got value out of this video, the best thank you is a referral. So if you could, please share this video with a friend, a family member, a colleague, or a fellow investor. Thank you. The United States government owes more than $37 trillion. That means your tax dollars are being used to pay interest on all that debt. And this is where President Trump has been proposing a new plan to help pay off this debt involving gold and involving crypto. And most people have no idea of how this plan works or the implication of this new plan on your money.